For literally thousands of years, people have used gold as an investment and physical store of value. And this is as true today as it ever has been, with the price of gold absolutely skyrocketing in the last few months. In fact, gold is almost as expensive as it ever has been throughout history when adjusted for inflation. And in the last 12 months alone, its price has increased by a massive 38%. But why is this happening? And what makes gold valuable in the first place? This video will discuss these questions, and we'll also mention 2 easy methods to purchase gold if you're thinking about making an investment. Hi everyone, welcome back to the channel. My name's George, and as someone interested in the topics of money and investing, I've always been intrigued with gold, and I often find myself wondering why we consider it to be valuable and what factors influence its price. And after seeing the huge increases in gold's price over the last few months, I decided to do some digging and get to the bottom of exactly why this was happening. And what I found was pretty interesting. There are many metals which are rarer than gold and more practically useful. For example, rhenium, which is one of the rarest metals on Earth and has some critical military and aerospace applications, but is around 40 times cheaper than gold by weight. So what makes gold so special? Why is it so valuable? And why has it been universally accepted as a currency and store of value for thousands of years? Well, the answer lies in a combination of a number of factors. First of all, gold is pretty hard to come by. It's not the rarest metal on Earth, but it is still very scarce. If we piled up all the gold that humanity has ever mined into a cube, it would easily fit under the Eiffel Tower, with room to spare, which just shows how little there is available on Earth. And secondly, gold is a very unreactive and stable metal, chemically speaking. It doesn't easily corrode or react with anything, and will pretty much stay in its pure form for, well, millions of years under stable conditions. So you don't have to worry about it rotting or corroding away over time. And thirdly, and probably most obviously, is the way it looks. People have been obsessed with gold's characteristic bright yellow colour for millennia. This, paired with its excellent malleability, makes it an ideal material for making jewellery and decoration. So it's these factors in combination which makes gold an ideal material for us to store value and to use as currency. But when doing this research, I thought to myself, okay, this makes sense historically, but we no longer live in a primitive society where we have to barter for things with livestock and precious metals. We've got modern currencies to do this for us. So why is gold still so incredibly valuable in the modern day? And why is it as valuable as it ever has been? Well, it turns out that one of the main reasons why gold is still so expensive and valuable in the modern day is its ability to be the perfect safe haven asset. In other words, gold's natural properties make it a safe and reliable place for us to store value and preserve wealth over the long term. For example, as mentioned earlier, gold is a naturally scarce material. And as humans have exhausted pretty much all of the easy to access sources of gold over the years, gold mining has become increasingly difficult and expensive. Therefore, the supply of gold is inherently restricted, and no government or institution can directly influence the price of gold by changing its supply. Now, contrast this to modern currencies like the US dollar. If they wanted to, the Americans could drastically increase the supply of dollars onto the market simply by printing more, which would erode the value of the dollar over time through inflation. So this fact makes something like gold a safer and more reliable place to store value than modern currencies, as no government or institution can tamper with its value by changing its supply. Also, gold is still universally accepted as valuable across countries and across cultures, which also contributes to its status as a safe haven asset, as there will always be someone somewhere in the world who perceives it as valuable. Okay, fine. So gold is valuable because of its unique physical properties and its status as a safe haven asset. But this can't explain why gold has become so much more expensive in recent years. These natural properties can't explain why its price has doubled since 2020. Well, to answer this question, we need to take a look at the factors which influence gold's price over the short to medium term and what's been happening within the gold market recently. One of the primary drivers around the recent surge in gold prices has been the growing instability around the world, both politically and economically. So finding somewhere safe and reliable to store wealth has become increasingly appealing to governments, institutions and individuals in recent years. We only need to take a second to think about the big geopolitical and economic events that have happened over the last 5 years to realise that the world is a lot more unstable than it used to be. We've seen a global pandemic, huge instability in the Middle East, the largest war in Europe since World War II, and the return of a US president who actively tries to be disruptive and unpredictable. So for many governments, institutions and individuals around the world, parking their wealth in a safe haven asset like gold has become an increasingly obvious thing that they need to do. So basic economics tells us that as the demand for gold goes up, which can't be met by a corresponding increase in supply, inevitably its price will also go up. But this market anxiety isn't the only factor which has been driving up the price of gold recently. In fact, many analysts believe that another factor has actually been way more important. Now, if we really want to understand why gold prices have surged so dramatically, we need to understand a bit about central banks and why they've started hoarding gold on an unprecedented scale. So for those unaware, a central bank is an institution which basically has the overall mission and goal of ensuring economic stability within a country. Each country has their own central bank. In the UK, we've got the Bank of England. In the US, they've got the Federal Reserve. And in China, they've got the People's Bank of China. Now, central banks will try to work towards economic stability by using a number of different methods. And one of these methods is by building up strategic reserves of assets. Essentially, the bank will stockpile assets, such as foreign currencies, government debt, and commodities like gold, in order to manage economic crises, back up the country's financial system, stabilise exchange rates, and as generally an insurance policy against tough times. And for many decades, two of the key assets that made up part of those strategic reserves of central banks around the world were stockpiles of the US dollar and stockpiles of US government debt. And this is because the US dollar is seen as the safest and most reliable world currency, and US government bonds are seen as the safest and most reliable investment that you can make. However, there are growing fears from central banks around the world that the US government can and will impose sanctions on these assets. And these fears all began following the Russian invasion of Ukraine in 2022. What happened was the Americans started to target and impose sanctions on the Russian central bank. In particular, they imposed sanctions on the Russian stockpiles of US dollars and US denominated assets, like US government bonds. And this freaked a lot of people out, especially the central banks around the world, as it showed that the Americans were willing and capable of interfering with other countries' reserves of the US dollar and US government bonds, which therefore no longer makes them the safe and reliable asset that they once were. So this has prompted many central banks around the world to start to diversify their strategic reserves away from the US dollar and US government debt, as it gives the Americans less scope to impose sanctions on these reserves into the future. China's central bank, for example, are massively diversifying away from the dollar so that the Americans have much less scope to sanction their reserves in the future. And if the central banks are moving away from the dollar, then they must be moving towards something else. And in many cases, they're moving towards gold. And we can see this in the data. Following the Russian invasion of Ukraine, central banks around the world are massively pouring money into gold. The People's Bank of China, for example, are buying up gold on an unprecedented scale. And it's this buying frenzy by central banks that many analysts believe has been the primary driver of the massive increases in gold prices over the last few years. And the market anxiety that we've seen at the same time is simply the cherry on the top. Now, just to quickly mention that these two factors aren't the only things which have influenced the price of gold recently. Other factors may include the fear of tariffs surrounding gold imports into the US, and Chinese investors looking for alternative assets to invest in after the collapse of the Chinese property market. But many analysts will agree that the buying frenzy by central banks and the general market anxiety are the two primary drivers behind gold's recent surge. If you've made it this far, you might be thinking about purchasing your own gold as an investment, and there are multiple ways that you can go about this, and each have their pros and cons. I've actually made a whole video about this in detail, so feel free to give that a watch if you're interested. But broadly, there are two main methods to invest in gold in the modern day. Firstly, you can purchase gold coins or bars and store them yourself. And in the modern day, probably the easiest way to do this is by going direct to an online broker and having the gold delivered to your home address or wherever you plan on storing it. If you're in the UK, you could go direct to the Royal Mint's website, which stocks a range of gold coins and bars, or you could go to a third-party partner of the Royal Mint, such as bullion by post. And there are many advantages to this method. For example, it's a very tangible investment. You can physically hold the gold in your hand and look after it yourself, as in you're not relying on any third-party provider or institution to sort of manage and look after the investment for you. And if you're in the UK, investment gold doesn't attract a value-added tax or VAT. And if you purchase gold coins, which are minted by the Royal Mint, that's Britannia's or sovereigns as they're called, then any gains on this investment won't attract a capital gains tax. However, the main drawback of this method are the fees involved. For example, if you're thinking about storing the gold at your home address, you might want to think about putting this on your home insurance, which could be pretty costly depending on the amount of gold you have. But probably the most important fee to consider is the difference between the actual metal value of the gold that you're purchasing and the price charged by the gold broker. For example, the market value of an ounce of gold might be £2,000, but bullion by post might be charging £2,100 for an ounce gold coin, including postage, etc. So this difference of £100 is essentially their commission or fee that they take. And if you work this fee out as a percentage, it can be up to 4 or even 5%, which as investments go is really, really high. For example, you can invest in things like investment funds for as little as 0.1% per year. So if someone wanted to make a large investment into gold, say £20,000 for example, they could be paying up to £1,000 in commissions just to purchase the gold. And that's before any insurance or storage fees that also might be involved. But thankfully, there is another way to invest in gold with much lower fees, and that is to purchase shares in a gold ETF. So to briefly explain, an ETF, or exchange traded fund, is essentially an investment fund which holds various different assets, from stocks to bonds to commodities, and the shares in the ETF are exchange traded, so they can be bought and sold by investors during market hours. So a gold ETF is simply an investment fund which holds one asset, gold, and therefore the share price of a gold ETF will rise and fall exactly in line with the price of gold. So what an investor can do is purchase shares in a gold ETF and be exposed to the price rises and falls of gold itself without actually having to own any of the underlying asset, as in you don't have to own any physical gold yourself. And the main advantage of doing this is the low fees that are involved, which are often much lower with the fees involved with purchasing and storing physical gold. For example, iShares Physical Gold is a gold ETF which comes with an annual fee of 0.12%. And if we compare this to the 4 or 5% fee which is involved with purchasing physical gold, then we can see why purchasing shares in a gold ETF is much cheaper. Also, shares in gold ETFs are much easier to sell than physical gold. Think, if you had a physical gold bar that you wanted to sell, you'd need to go to some sort of gold broker, and there would inevitably be some sort of commission involved. However, with shares in gold ETFs, you can buy and sell these on online platforms almost immediately and sometimes completely commission free, which is a big advantage. And I suppose the main disadvantage of gold ETFs is the lack of tangibility of the investment. You know, you lose the ability to actually physically hold a gold coin or bar and have it in your possession. After all, investing in gold is kind of an insurance policy, and for a lot of people, physically owning that gold is part of that insurance. The only thing to bear in mind is that paying a 4 or 5% fee for the privilege of owning physical gold is a hefty price to pay in my opinion. So for me, the appeal of a gold ETF is very high due to the low fees involved and the ability to buy and sell shares in it almost immediately and sometimes commission free. If you've made it this far, you might find some of my other videos on the channel interesting, as I've got plenty more on the topics of personal finance and investing. And if you've got any questions for me, then please leave me a comment below and subscribe if you've enjoyed. Thanks for watching.